Grüezi. Hello and welcome to this brief introduction to the basic principles of value-added tax systems. Thank you for your interest in this subject. I hope I can create some aha moments and arouse curiosity in this short video. Value-added tax, or in brief VAT, was invented in the early 50s of the last century by the French tax director Maurice Loret. France introduced the system in 1954. There are many language and country-specific terms for VAT such as Mehrwertsteuer, taxe à valeur ajoutée, Umsatzsteuer, and so on. They all refer to the same type of indirect taxation. So, what are the characteristics of VAT? Basically, VAT is a consumption tax levied on consumption of goods and services. The tax is levied on each stage of the supply chain. VAT should be neutral to businesses, and businesses act as the unpaid tax collector. So how does it work practically? Let's take the example of a consumer buying aluminium bottles in Switzerland. The value of the goods is, let's say, 10,000 Swiss francs, the so-called net amount. On this amount, VAT is charged at the rate of 7.7%. This is the standard Swiss rate for goods and services. The 770 Swiss francs are added to the net amount, so we get to the gross price of 10,770 Swiss francs, which is the price to be paid by the consumer. The 770 Swiss francs are the taxes to be received eventually by tax administration. But how is this amount collected through the entire supply chain? Let's first establish a theoretical supply chain. We start with the manufacturer buying machinery, raw materials and services to manufacture aluminium bottles. The finished goods are sold to a distributor who's selling to the end customer. Now we'll have a closer look at the various business transactions. The manufacturer is buying raw materials from vendor A, including a VAT charge at standard rate. They also buy machinery from vendor B, including the VAT charge. Vendor C is charging 500 Swiss francs of import VAT for an import of goods delivered to the manufacturer. Vendor D is charging services rendered locally, including VAT. Vendor E is located abroad and charges services rendered in course of doing business with the manufacturer. The charge is net of VAT because it is an export of services from the country where the vendor E resides. According to place of supply rules, the service is subject to Swiss VAT and so-called reverse charge, or in Swiss terms Bezugssteuer. Let's have a look at the summarized transactions. Whilst the manufacturer is paying the gross invoice amounts to its vendors, Swiss tax administration receives a total of 654 Swiss francs in VAT from vendors A to D. This is also the amount recorded as VAT receivable by the manufacturer. Now the manufacturer is selling the finished goods to its customer, a distributor or retailer. Net price of the products is 5,000 Swiss francs and 7.7% of VAT are added, resulting in the gross amount of 5,385 Swiss francs. For simplicity, transportation cost is excluded, but if there was a transportation charge, it would be subject to VAT as well. So let's have a look at the summarized transactions again. The manufacturer records the VAT from all its supplier invoices on the VAT receivable, or so-called input VAT. For the service rendered by supplier E from abroad, the reverse charge procedure applies and the manufacturer self-accounts for VAT by recording the calculated VAT amount on the VAT receivable and at the same time recording VAT payable for the same amount. VAT on sales to the distributor is recorded as VAT payable or output VAT. The net VAT payable or receivable by the manufacturer is calculated by adding up output VAT and deducting the sum of input VAT. In this example, the manufacturer is in a receivable position due to higher input than output VAT, and the manufacturer will receive 269 Swiss francs from Swiss tax administration. Let's examine the next step of the supply chain. The distributor receives the invoice from the manufacturer and records the VAT amount on the VAT receivable. Eventually, the distributor is selling the aluminium bottles to end consumers and records VAT payable of 770 Swiss francs. So let's have a look at the final summary of the supply chain. The distributor has recorded 385 Swiss francs of VAT receivable and 770 Swiss francs of VAT payable. The net amount of 385 Swiss francs in VAT is paid to tax administration eventually. If we add up the receipts and reimbursements of VAT, tax administration received the 770 Swiss francs in VAT due on the final sale to the end consumer over the entire supply chain eventually. Now we understand the basic principles of VAT theoretically, but practically there are some caveats. Yes, VAT is a consumption tax, and yes, it is levied on each stage of the supply chain. But is it really neutral to businesses? It's certainly not, and the cost of VAT for businesses starts with being the unpaid tax collector. There are many practical elements and traps in VAT systems adversely impacting the bottom line of businesses. Hence, it is important to actively manage and control VAT to avoid losses and mitigate risks. Specifically on international trading with multiple VAT registrations, things become complex. Understanding place of supply rules and their exceptions, as well as knowledge of use and enjoyment rules affecting your business, are some crucial elements to VAT compliant business transactions and require expert knowledge. Building the bridge between the business and indirect taxation requirements by creating robust processes, control procedures, and the respective organizational structures are my area of expertise. So if you're interested in minimizing risk and cost of indirect tax in your business, I'm more than happy to take your call. Thank you. Auf Wiedersehen.